What's going on, guys? Ready for this week? Get it started in 3 minutes. All right, guys. So, what we're going to focus on this week, right? We're going to go over that part. What's going on, guys? So, last week, we're just going to talk about the US and China's trade agreement, right? And we're going to get into more detail about it. But last week, the US and China pretty much had a trade agreement, and the agreement, the terms was just over exports on rare earth materials, right? So, do I expect? I felt like last week, just because the way the trade agreement came out, it was the markets took it the wrong way. I feel like, because this had nothing to really do with the overall framework. I felt like we had a very, very big overreaction in gold pushing lower the way that it did, because all we got from Trump was, he said it to a reporter. He was just like, yeah, 2 days ago, forgot to tell you guys, but 2 days ago, we signed a trade agreement with China. But he never got into detail. So a little hints here and there saying that the details are just over rare earth materials, right? It's not really about the overall framework on the percentages of tariffs. We're not getting any of that information, right? So you just have to be cautious on how, especially today, when the markets start to digest that information, we could possibly see a little bit of recovery, just because we're getting a little more detail about what the trade agreement was about, right? And it's not as big as what we thought. But the positive point of it is the talks are moving forward, right? Just to put it in that perspective, the talks are positive. You know, when it comes to risk sentiment, we have to pay attention to, are we seeing stacked good news, or we're seeing more stacked bad news? And that's what's really giving us a bias. So even though the bigger picture, right, the trade talks is not expected of what we actually want, but at least it's still moving forward. And that's what the markets really cared about that Thursday and Friday. But now we're going to be able to digest that information. Just don't be hopefully, I'm hoping most of you guys didn't take sells on gold at open, just because of that expectation. Okay, guys, I don't want you guys to just jump right into it knowing that we're not getting the bigger details of it. Okay. But now, how did the markets react last week? We saw that we had a complete risk on market. We saw equities pushed higher. We saw that equities definitely pushed lower. I mean, equities pushed higher, gold pushed low, right? I took advantage of those sells. I know a few of you guys took advantage of those gold sells as well. Like, an amazing job, especially for you that took advantage of equities. I felt like equities just been a huge buy for the past 2 weeks. I don't know why I didn't take it. You know, I think I took one trade on NASDAQ buys and I got out at break even. But man, I can't imagine if I would have just held it. But that's what pretty much what happened last week. Moving forward, we're going to focus more information on trade deals, right? On the trade talks with China. Let's see if the markets, what I said earlier, let's really see if the markets go back to that and realize like, oh shit, this is not really that much of a big deal, right? And let's see if we could get a little bit of recovery if the markets expect that. And we also have to pay attention to more headlines between Iran and Israel. Even though that we have positive war de-escalations, there's still a chance that we could see Israel can retaliate, because we are seeing a little bit of headlines coming in that Iran still has the materials to still make nuclear weapons. They're still saying that the US didn't bomb everything. So we just have to be cautious of that, okay, moving forward. And this week is NFP week, guys. All right, so that's definitely important. So important data coming up Monday. We don't really have nothing big, but I would assume Monday will be the day that we should be getting more news headlines, especially when we don't have major economic data to impact for the day. So just be cautious of Trump's comments, right? Trump coming out with comments. Pay attention to those news headlines that is coming out. Tuesday, very quickly, we have US job jolts and US PMI data. Wednesday, ADP employment. Okay. And Thursday, normally we have NFP is usually on Fridays, but it's on Thursday this week because Friday is 4th of July. All right, guys. So Thursday is going to be, it's going to be a short week, but it should be a impacting one. All right. And this just so you guys can get a snapshot of the holidays, but all that really matters. Thursday is a partial day closure. So I'm assuming probably after, I would assume after 12 p.m. Eastern, I would believe that the markets will probably close after that, because obviously it's going to be NFP. The shitty part about it is when we got a partial closure is volume, right? Or like depending on the print, obviously, but NFP typically give us really good opportunities. And the fact that Friday is a holiday, then we're leaning towards a weekend. It's hard to determine how this Thursday is going to be. Okay. But just anticipate a very short week. All right, guys. So just give you guys another quick glimpse, you know, just for you guys to just be updated with economic data. So you're prepped for the week. So Monday, for you guys that we going live, we're going to be focusing tonight. We're going to focus on UK GDP data. All right. I think it's extremely important that we focus on GDP. We're finally seeing a shift in the UK's monetary stance, right? We've been taking advantage of a stronger pound for like most likely since January till probably last month, right? We just been having such a stronger pound. The United Kingdom hasn't really been dealing with fears on tariffs, right? Because they're like the first country to actually make a deal with the US. We've been seeing that their inflation has been sticky, and their growth has been strong, and their labor data has been strong as well. So we never really had any clear reasons to take advantage of sells until this month. Like earlier this month, we've been seeing a little bit of downside in the pound currency just because of economic data. So especially with tomorrow night, if we get a weaker GDP print, that could give us more downside reaction, right? That's something that we should definitely look to take advantage of. But most likely GU or GJ could be a very good pair. I would want to take advantage of a miss, but just looking at this data, we could see that it is looking like the markets is expecting, like institutions, they're expecting the data to remain the same. If it remains the same, It's not a tradable opportunity. All right. But we're going to be looking for a clear beat or a clear miss in order for us to take advantage of a clear trade. All right. So we want a clear opportunity. So as we can just see, like Monday, we just got Euro HICP, but it's inflation. And we got Lagarde speaking later in the day, but very quiet for US session. We got Chicago PMI, but that's not going to be a really big news event. Moving forward to Tuesday, as you can see, a London session, we do have more Euro data. Then we got the UK and Euro PMI coming up, so we'll be trading that live as well. PMI data, we want to see a trend of data for the UK, even for Euro, moving in one direction. Okay, so we don't want to be taking advantage. Like if GDP comes out higher and then PMI for the UK comes out lower, it's not going to really give us a good edge. Okay, so we want to be able to take advantage of the direction staying the same way moving forward. All right, just so you guys could be up to speed. And like moving towards Wednesday, we have challenger layoffs and ADP employment, right? Usually challenger layoffs hasn't been a major focus, but it wasn't last month. I believe it was the month before that. We had a big drop in challenger layoffs, and we did see a reaction from the US equity markets because of that drop. Okay. And ADP employment is also a focus as well. We had a big drop. I believe we had a drop last month, and we could take this. Does most investors look at ADP employment as an expectation of what NFP is going to do on Friday? Is usually just trade it as is, but don't, most people wouldn't want to, if we get a miss in ADP employment, their odds is like trying to hold sells all the way to Friday. We still don't know how that NFP print is going to be, but this could definitely give us some really good opportunities as well. So just remember, this week, it's just nothing but labor data for the US. Thursday, again, we got UK and Euro PMI data. And just at the end of it, we're going to finish it off in the week with trading average earnings. We got wages, we got jobless claims, and we have NFP and PMI all on Thursday. That sucks. But we know that the focus is going to be on earnings, right? Because we need to see earnings as inflationary. We need to see if earnings is also pushing lower. That shows that inflation, people's earnings is not increasing, it's still steady or lowering, which is deflationary. Then if we could get a miss in labor data, that will probably be the best bet for us, because if we get a miss, do you guys think the Federal Reserve will hike rates or cut rates in July? If we get a big miss in today's print, what do you think will be the best odds? Will it be a hike or a pause, or you guys think it will be a cut? What's up, guys? Yeah, Mo saying pause. I like that. I think that they're gonna pause too. I have a good. I feel like they're gonna pause this month too, because if they just cut rates, right? If we just see a rate cut, I think that's just gonna be my thing. If they just cut rates, man, that's just gonna make it very hard for the Federal Reserve to explain themselves, right? Because they have to very much go into detail on why they're cutting rates, right? Because the question is going to be why you didn't cut last month, right? Because we had lower numbers before, so how come you didn't do it last month? So that's why it's going to be it's going to be interesting to see how it goes, because they should have cut last month. And then if they cut in July, they're going to be thinking that the feds are being influenced by Donald Trump. So it's going to make it even harder for the feds to do what they want to do because the markets is just going to react to whatever Trump says. We're going to get a cut eventually, but when they do cut, watch Jerome Powell go into extreme detail on why he made a decision to cut, just so that it doesn't look like he was influenced by Donald Trump. So it's just going to be very interesting to see where it goes. It's hard for the markets, right? Because for us, it's like we can't listen to the president. We're supposed to listen to the chair of that central bank. But if he does make that cut, investors are just going to listen to Trump, right? This is why we've been seeing such a weaker dollar. Makes sense, guys? So I'll just have a little video here for you guys. I don't know let's see if you can hear it, but just to give you guys an idea on pretty much what's going on.
President Trump says the U.S. signed a trade deal with China but offered no details on the agreement. Meanwhile, the president continues to pressure other nations to come to the table for trade negotiations or face some steep tariffs. For more on this, our Weijia Jiang is at the White House. Weijia, good morning. So what do we know about this new trade agreement with China, and is it final yet?
Good morning, Michael, and good morning to everybody. So this is not exactly a new trade deal. This was formalizing talks that already happened in mid-June to really move forward with China, because as you remember, we were locked in a pretty tense situation where the U.S. was threatening 145% permanent tariffs on China, which would be unsustainable not only for consumers but for businesses. So in June, they came to an agreement to bring those rates down, and China also brought the rate of U.S. Exports down to 10%. We went from 145 to about 30%, and also agreed for China to start reducing any restrictions on rare earth minerals. And those are really important for many different sectors, especially when it comes to technology, because those things are used for components in consumer electronics, in wind turbines, in electric vehicles. And so what the president was talking about yesterday, according to a White House official, was just putting a signature to that agreement. So we shouldn't think of it as the end of the trade war or the big trade deal with a capital T, but it's certainly an important development as we continue to watch how this all unfolds, Michael.
And you see, makes sense. So that's why, you know, looking at gold, I'll get to your question, Lex, a good question. This is why, like, I feel this reaction on gold was a bit of an overreaction, right? But we did have, obviously, the talks with China is positive to the markets just because we're seeing it progress forward, which is what we want, right? Shows stability. But the agreement, he made it look like it was bigger than what it really was. So I feel like that's the reason why, you know, just in case, right? If you see gold pushing higher, you're not going to be shocked by it. You get what I'm saying, guys? So you're not going to be like, how come gold did this? You know, like, ain't it supposed to be pushing lower? At least you get an idea if we like, because stuff like this could lead us to be in ranging markets. And that's what can make opportunities a lot difficult. So for you guys looking at gold, I would definitely recommend trying to, one, either wait until we have a clear reason, right? Or if you're trading technicals, just waiting until after 9 p.m. Eastern, and anything after that, you could take advantage of those opportunities. I would like to see at the time, I want to see a bit of a relief move. So if we could get any price action breaking above 32, I would say, yeah, like around 32.80. So just look at the structure. Whatever your numbers are is probably a lot different based off the feed. If we start breaking above structure, that could give you guys an idea that we're probably going to see a little bit of relief on a Sunday, maybe on a Monday as well, just because if the markets do digest that the fact that whatever is going on with the trade deals is not as serious as what they made it seem like, we could see a little bit of a pullback. I still like the idea of us hitting certain zones and looking for better sells later on, right? If we could hit these key areas, these target areas, because as long as the Iran and Israel situation is still showing de-escalations, right? We're seeing forward progress. They're still continuing their ceasefire. that still gives us reasons for more downside in gold, especially when we have positive tariff talks. So no reason to be looking for buys from a longer term perspective, but you could take buys from a technical perspective, from a short term perspective, from like a short term opportunity. But I still like the idea of gold pushing down longer because we have, for this current moment as of today, we still have de-escalations. But if anything changes, right, if we see that, because it happened last time, if we see that China comes out and says that they don't like the framework, right, they don't like the agreement that they made with the US, that would be a reason to buy gold again. Do I think if Israel attacks Iran, would that be another reason to buy gold? I think short-lived, not nothing major. I think it would just be short-lived. But when it comes to geopolitical tensions, if the US gets it, if the US does it like another attack, and I think if they do it in the middle of the week, that would probably be the opportunity from the initial headline. Don't look to take advantage of it from a long-term perspective, but take the buy from like an initial opportunity. Just take your scalp and then get out. All right. Because tariffs is what really matters for gold. But if we're still looking for sells, obviously, if we start breaking below this area support of 32.50, that will probably tell us that ideally gold is still pushing lower. Markets is still taking this as a positive, and we should be able to take advantage of those sells. All right. So ideally, again, I still want to see if we could break above structure. That should give you an opportunity over Asian session. If we see relief in the markets, all right, we could take advantage of that pullback. Does passing of a beautiful bill affect the markets? I feel that I like the idea that the bill will, if it gets passed. I think it's just going to impact the dollar, right? I think it would impact the bond markets. It's going to show the U.S. is adding more debt, right? So it could definitely, I could see that hurting the dollar and probably pushing equities lower and pushing the yields higher. I think that will most likely happen if they pass the bill. But it's hard to determine yet because it just depends on how the markets feel about it. Do they feel that the bill is going to cause a better situation for the U.S. longer term, or they think that this is just really going to add in more debt, right? Because if they feel like it's going to add in more debt, that's definitely going to hurt the dollar. You know, we're going to see the dollar push even lower for that, as investors is not going to trust the dollar or the U.S. with their business decisions, right? So that's what's going to happen for this week. If you guys, so far, if you have any questions, like now's a good time that we could talk about whatever you guys have into mind. I give you guys some time. Based on your dollar, what is your bias on gold and dollar? Well, dollar, right? So I'm not going to trade. I don't want to take technicals on dollar this week. So I want to focus on trading NFP, right? Labor data, every New York session where we have the labor data, that's going to give you an opportunity. So if we get weaker data coming across the board, we're going to see dollar, even it might happen already. It might start happening soon, where you're going to see dollar breaking below this area of support because of the expectations of the Fed's likely to cutting rates in July, right? Especially adding negative data on top of that. This is what's going to give us a bearish bias on the dollar. So that's why I think shorting the dollar is most likely going to be the best bet. Do I want to take it from the lows? Absolutely not. Hopefully we could get a bit of a pullback first, right? Looking like price is going to push higher. And then once we start breaking back into the range, that's where we should be looking for ourselves, right? Safer sells is obviously if we start staying below 97.0. And if you want to look for clear opportunities, it's best to take it with reasons. Don't try to take any trades right now just only technicals alone. If you do it, make sure that it's in the direction of the bigger picture. So we like the idea of a weaker dollar. And gold, I think today gold should be 50-50. Overall, I do like the sells, but as of today, still be 50-50. When it comes to equities, right? If you're trading NASDAQ or if you're trading US 30, S&P 500, pretty much the same. But what you want to do is trade it like, because we're already at the highs, right? So you don't want to buy at the highs. So you want to see if we could get a little relief. And when we're trading important data coming up for this week, or if we get a massive headline, that's when you should take your opportunities, because remember, this week is going to be short, right? Because I believe after 12 p.m., if I'm not mistaken, we're going to see that we're going to have a short day after NFP pretty much. So opportunities when we get the labor data that comes out, also with PMI and any news headlines. Try to see if we could get a pullback first before you start taking advantage of equity buys. I like equity buys longer term because everything supports it, right? Fed's wanting to cut rates. Jerome Powell just confirmed that there's no recessionary fears, right? So we see that the U.S. has strong labor, strong growth. We're not seeing any trend of weaker data. And just like to give you guys an example, you could just look at, just show you the chart here for, this is NFP, right? So when we're trading this live, just look how steady NFP has been since probably ever since after COVID. Like we just been seeing that NFP is not dropping below zero. Like pretty much from January to April, we just been staying along this range. So it's been pretty steady, right? So if we get a big drop in NFP, that would definitely trigger some alarms. That will force the feds to cut. That would be a reason to look for a weaker dollar. We'll probably see equities push lower from that because that will show signs of slowdown. But when that sell happens, still understand the bigger picture is buys for equities, because this will give us expectations for the Fed's cutting rates. All right, guys. So pretty much it for the weekly prep. If you guys have any questions before I end it, if not, I will see you guys. Well, I'll see the private group. I'll see you guys at 2 a.m. How can we tell whether you enter your trades, whether it's short term? Like I always recommend, if you're asking that question, it's just because you just have to have a trading plan. Like don't go based off of what somebody does. Like an example, if you're just working on trying to be consistent, right? If I take advantage of GU buys, right? And I'm in profits, I'm looking at market structure as areas of interest of where I should take profit. So if you're working on being consistent, once you hit this first zone, that should take profit one. So if you just want to start just winning trades, I would just recommend take profit as you hit you hit your first zone. The markets ain't going nowhere. It's about building consistency and building your confidence and learning how to be right. If you want to let the trade run, what would your second trade be? This would be my take profit too, because I see that this is where price action is struggling, right? So if you're looking to hold a trade, I just recommend breaking even, take partials, or do something. Don't just let the trade run, because there's a chance that you could hit your first take profit and then price just goes back against you, right? So that's what I recommend people to do. Just look to the left. Wherever you see that first zone, use that as a first take profit. If you want to continue to let it run, where would your second one be? You look to the left and say, okay, this is my TP3. So that's how you determine when to enter. When it comes to like right now, from a fundamental reason, if I want to hold gold longer, that would be if China escalates tariffs. If they say something negative about tariffs, then I would take those buys and I would try to hold it through those top three. Yeah, exactly. Not every trade is a home run, but that's what I would do. I would, if it's like tariffs, because I'm trading gold, right? So if I see that tariffs is negative and I see that China is showing escalations, then I'll definitely want to hold those trades longer, because I already understand that gold is very sensitive to tariffs, positive or negative, right? So that's what I'll look for. And then opposite, if I see that China says that they do agree, like we see that there is more trade deals being signed between China and the US, I'll be looking for longer term sales. That will give me a reason to hold trades, hold gold sales a little longer, so that's what I would look for. It's always reasons behind it, long term. Like it depends on the pair, like if you're trading gold, you understand what makes it longer term and short term. If you're trading a currency, like if we're trading the dollar, right, the sales has already happened, because it also depends on where you are in the chart, right? So if I'm looking at the daily, does this look like just from a technical perspective, does it look smart to just hold sells right now? So it depends on where you are as well. Like if I would prefer to see if we could form a lower high, then I would probably look for entries for sells once I form a lower high for better long-term sells. But trying to take long-term sells at the lows, you need real reasons behind it. So that's why it's best if you wait for economic data or something like that to try to take your longer term sells, right? Because right now, if we have a weaker date, like say if it's PMI and it comes out lower, you take those dollar sells, it might be short lived because we're already testing these lows. And there's going to be a lot of people taking profit at those lows. So it's best to take that as a short term trade. Make sense? Yeah, and like, because like what happens is when you start doing that, you're going to start figuring out what works for you as a trader, right? You're going to figure out, like I like these type of opportunities. There's going to be a time where you're going to take a trade and it's just going to be the longest trade you have ever held. But you're just trying to skip steps, so just go through just hitting your take profit, get comfortable with winning. And then eventually you're going to start understanding the markets. And then you're going to start like figuring out, okay, now I can see, let me give this one a try now. Let me see if this works based off of what's going on with the markets. But just don't skip steps and just go all the way to just holding trades, because that's just really guessing at the end of the day. All right, guys. So hopefully you guys enjoyed your Sunday. And like lastly, I'll give it like 2 more minutes if anybody has any questions. If you're good, just put a 1. And I'll see you guys in a lot for UK GDP. Last question, does Nvidia drive the dollar? I wonder who told you that. Nvidia is a stock company. It doesn't drive. It drives NASDAQ, right? So if you're looking at like tech stocks, right? So it drives NASDAQ, but it's right here. Typically, just look at the direction and compare it to NAS. So it will follow that, but not the dollar. It's a good indicator when you're trading NASDAQ, definitely. But yeah, who told you that shit? So people could avoid them. No offense. It took a while. I wish I had somebody like me to help me with the fundamentals. I mean, it just depends on what to look at. Like the hardest part is like you could get information overload, right? Like it always feels like you're always missing out on something, especially when you're learning on fundamentals. Like people's going to dive deep into all types of shit. Like they want to learn about, then they want to do like one of the things, what was it called? Like COT reports. Like people want to dive into that shit. Then you want to dive into understanding interest rates, inflation. Like you want to dive into something else and then something else, right? So it's just like you're just constantly learning. But what you're not doing is trying to, how does this improve your trading, right? So like I had to learn that way. It's like, okay, does this actually help me make a trade at current time? So I realized that what does help me is taking trades when there's reasons, right? So I have to, the markets is just about the way I interpret it, right? The markets is just all about cause and effect, right? So if something happens, what is the effect of that to the markets after it happens? So if data comes out negative, what's going to happen to that currency? If there's a war that happens, what is going to be the best pair to take advantage of it, right? If somebody blew up oil facilities, would you take buys or sells on oil, right? So when you can start understanding that stuff just in your mind, right? Not looking at a chart, just when something happens, how do you think the markets is going to react in your mind? Then once you can start getting good at that, then you can start looking at the charts, and then whatever technicals you look for your entries, you do the same shit, but just trade it within the right direction of whatever cause that is impacting the markets. So that's what really helped me. Don't spam. When trading on evaluation accounts, how do you keep your emotions down? Try not to rush through the process. Just use proper risk management. Like you're blowing your account because of your over leveraging. Yeah, markets didn't move this much, Forex Blues, because nothing really happened over the weekend. So it was a quiet weekend. Typically, we've been having a lot of noise over the weekend, so nothing is really happening. So that's one of the reasons why we're just not really seeing much. But yeah, like controlling your emotions is big. It impacts a lot of people, but it's just about it's about money, right? So when you're over leveraging, you're forcing your emotions to be involved, right? So that's why you just have to lower your lot size. Just focus on like 2%, 2% risk, 3% risk, or whatever you use in a prop firm or whatever. Just make sure you follow those rules. Like if you look at what I'm pretty sure why majority of traders lose is because they over leverage, so it's nobody trades proper risk management. So use risk management will help you control your emotions a lot better. Just focus on being right. The money would come once you build consistency. Do you mind? I did it in a private group. Like that's what we have in a private group, creating trading plans and stuff like that. And it's in a course. So like for those that are in the group, you just go here to the new fundamentals course and everything is here on how to build. I have everything here on how to build a trading plan. And on our core fours, like that's what we work on, building a plan. So like task building and trading plan, I did it right here. So everything is in the group on how to build the trading plans and stuff. You see entries and reversal video. So everything is there. Does bias only come from central bank? No, like bias comes from anything. It could come from economic data. It could come from technicals. It could come from news headlines. Right. Well, this year central banks haven't been a huge factor because of tariffs, because they can't make any adjustments on their monetary policy without understanding how tariffs is impacting the economy. Right. So how is it impacting inflation? Is it slowing down growth? Is it causing fear? So central bank decisions is not really that important the way it was last year because they're still waiting to see how tariffs impact the economy. So that's why like it's been a lot tougher for certain fundamental traders because they're like, yo, shit, I'm waiting. When we trade rate decisions, those be clear opportunities. But during these rate decisions, we don't really get shit. Like Jerome Powell's been saying the same thing for the past since last year. I don't know if I should have it. Yeah, like this was what he said. The U.S. is not in a recession. If we don't see that, right here was good though. Like I felt like what Jerome Powell said last week kind of gave us a hint towards cuts, because he wants to see weaker labor data. And if the economy is slowing this year, right, he's going to actually, if we turn out that inflation pressures are contained, we'll get into a place where we cut rates. It's very dovish, right? And that's what we're seeing. So I felt like last week he kind of gave us a hint, right? And future trade deals may allow the Feds to consider a cut. So let's see what happens, right, when it comes to that. But don't make, when I trade rate decisions with the group, I'm only waiting for a clear edge to take a trade from a central bank bias because they're just playing data dependent. So that's why it's not really the same as it was last year. It's a lot tougher for people, So does the US and China trade deal agreement contribute to more risk on? Not really. I think it would impact CAD itself. Right? It would most likely impact CAD itself. I would just trying to see. I think I know I got a CAD chart. I would rather look at that, like trading CAD, because CAD finally is reacting along with oil, which is a good sign. We haven't had that in a very long time. So I like that idea of looking at the CAD, but if things are positive or negative, just try to look at the CAD itself. I don't really think the markets care that much about how the deals is going with Canada, but it does impact the CAD currency itself, right? If it's negative, we understand that could weaken the CAD currency, right? which will probably be very good opportunities for something like CAD JPY, because those talks is going to start coming in, when it comes to how Canada and their agreements with the US. And with the US, it's usually China. But the euro, if euros continue to have more negative talks when it comes to tariffs with the US, it would impact the euro currency itself. Okay, so just look at it from that perspective. But if they do make an agreement, like, yes, it will add on to more positive reactions, because it's stacking on positive news. So that's what you want to pay attention to. Like, it sucks to see that China has an agreement and then Canada doesn't, and then Euro doesn't, and then we got de-escalations with Iran and Israel, right? So we just we want to take trades and take out opportunities when there's a clear edge. If there's not a clear edge, it just shows like, okay, what opportunity should I take advantage of? But then that's when it comes down to price action and risk flows. So if you see a risk on market, shows that the market is very optimistic. If you see a risk off market, shows that the market's really looking at it from a negative way. All right. I don't know what you mean by that. Every currency is bearish. So every currency is bearish. Well, if you're talking about risk flows, like, yeah, if we have like a risk off market, like you will see the top AUD, NZ, and CAD typically would be bearish, and the yen, the Swiss will get stronger. Sometimes the dollar, but the dollar only been reacting as a safe haven when we had geopolitical tensions. But when tariffs became an issue, dollar got weaker. But when there was war tensions, dollar gained strength as a safe haven. So, yeah, you look at the yen and you can look at the Swiss for safe havens to see if it gains strength. Makes sense, guys? Put a 1 if your guys are good. And then, yeah. See you guys for UK GDP. How can we how can we prevent a loss when we trade mixed data? I mean, you don't trade mixed data. So like you don't guess before the data comes out, right? So let me just give an example. So like right here, this was Friday. If you got, I know it's short, but this was US Michigan sentiment. So we understand if sentiment and conditions comes out stronger and then inflation expectations is lower, that supports equity buys, right? So if I see inflation numbers are higher, that would support dollar buys. So before we trade data, we understand what the numbers has to come out as and how does the markets react to it. So if I'm trading data and I see that it's mixed, that just means you just don't take a trade. That's all. I don't care what the markets do. If I see that the data is mixed, I don't take a trade. But when I see something like this and I'm like, okay, this support equity buys, right? Now I already have my areas of interest marked off. So if I'm looking at NASDAQ and I see that this is an area of resistance and say this is an area of support for me, right? And then I see that the data came out the way that it did. We see that sentiment was higher, inflation is lower. That's a key signal for NASDAQ to be buying up. I want to see if the price action reacts to the data. So when I see it break structure and the data supports the direction, I'm taking buys as we start breaking above resistance. So that's really it. If I see that NASDAQ is pushing lower and I'm like, the data should be supporting equity buys, I'm not taking sells because it doesn't make sense. But what I will pay attention to, right, is, oh, maybe it could sell off and then push higher afterwards. Then I will be looking for buys as we start breaking back above structure. That's my high risk buy. My safer buy will be above here. If data supports sells for equities, I'm taking the sell as we're breaking below support because the market is going to push in the direction that the data come out as. Typically when it's mixed, you probably won't see a reaction because then the markets don't know how to incorporate that data. So that's where like you learn how to avoid unnecessary losses. Wait for the data to come out, then wait for price action to push in your direction. A bias. So I mean, if I don't know what you like, if looking for like weaker currencies, it depends on risk sentiment. I think that's what you mean is risk sentiment, but I'm not sure. I mean, like a checklist, what you do right and what you do wrong. So just like write down all the stuff that you do wrong in trading, like all the stuff that you do wrong in your gut. Like, what are the things that you fuck up with, right? Like, is it over leveraging? Is it not waiting? Or is it that you just don't know shit, right? Because if it's like, oh, I don't know anything, then you know that, okay, now I need to be a part of something to learn this information. But if you already know, and what is it that you're failing about, right? So just write it down. Like, everybody here knows what they do right and what they do wrong. When you win a trade, what are the things you do right to win a trade? And then what are the things you do wrong to lose a trade? So usually you just be very blunt and write that list down. Most people don't write the list down. But all right, guys, I end it here. Do you ever feel any emotions whenever you take a trading during news? I mean, not really. Do you ever feel any emotions when you take a trade during news events? Not really. It's just money. But I use really good risk management, so it doesn't affect me as much as what it did when I started, right? So what helped me with that in the beginning was getting a good job, right? Because when I was able to pay my bills and I was able to take care of my family financially, it gave me the breathing room to actually learn the skill and get better. It's a lot harder if like you're struggling financially and then you're trying to take trades and you're closing trades because you're in drawdown, not because you're actually losing a trade, right? So like I would just recommend just trying to get a job, use that as a benefit to help build you up. And then it gives you the time to actually learn the skill set. The work comes first. I just risk 2 to 3%. That's all I do per trade. And I take 2 trades a day. So I take like maybe 3 depending on what's going on, but I take 2 to 3 trades a day and I just risk between 2 to 3%. Like normally, like I would only take a trade when there's a reason, but I'll probably take a technical setup if that comes up. But mostly I just wait for a fundamental setup, like economic data or news event that comes out, then I'll take that trade. And then people that do it that way, like they end up seeing consistency. They really do. They really do see consistency. I just like what I said earlier about fixed targets. It's just like looking at market structure. That's all. You just look at market structure. Like, and then when you take a trade, you should know your stop loss. Like before you take any trade, you should know, all right, where you're going to enter, where your stop loss is going to be, and then you should know where your take profit is going to be, right? So before every trade, you should know that. You should know how much you're willing to lose before you even enter a trade. You should know how much you're willing to risk. And then you should have your take profit wherever you think your take profit is going to be, it should be there. But the moment you hit a zone, right, you just like, say if I enter buys and I hit this first zone, like make a decision, right? Either you're going to break even or you're going to take partials, or you just like, if you want to let it run, then let it run. It's fine. But when you hit that first zone, just mentally make that decision, so that you could actively be there and actively be present in the markets. All right, guys.